But we're talking about the new listing. Let's talk about that one. We have Ankur Gupta, who's the managing partner and head of real estate for Asia Pacific and Middle East at Brookfield, joining in on account of the listing of Schloss Bangalore, the company that owns and operates Leela Hotels. Thanks a lot, Ankur, for joining in. It was a pleasure speaking with you when the issue opened for subscription. And now as we speak, it's a subdued listing that we've seen on account of a couple of factors. One, the market sentiment by and large is, on the downside in today's trading session, but also the demand for the IPO, barring the qualified institutional buyers from a retail and an HNI standpoint, was just about par for the offer that you made. The big question, however, from here on, even as there are a lot of tailwinds for the industry, you get the added benefit of lower finance costs. So basis the stock that currently is trading and the valuations that the street is ascribing, they are expecting close to 250 crores in terms of profitability by FY27. Do you think that's a realistic estimate given the 150, 160 crore savings that you will get on account of finance costs?
Hi, Mangalam. Thank you very much for having me today. A very good morning to all of your viewers. It's a momentous day today. In the path that exists in front of hospitality in India, the story of real assets in the country, and the development of India that needs to be housed in properties and companies like the Leela. It's the largest IPO ever in the history of hospitality sector in the country, 3,500 crores. Very, very grateful to a lot of investors and first-time investors. We've had sovereign funds coming in from the Middle East, from Europe, few of the largest names out there in the domestic mutual fund space. So I would say that today is a day to celebrate how far along the hospitality and the real estate and the real asset sector in India has come through. On behalf of Leela, I would say that since our March numbers that have been publicized, and you're accurate that post-listing, the finance cost will substantially reduce. More important than the finance cost reducing is the amount of access that Leela has today to capital, to partnerships, to stock, and to growth. I'll give a couple of examples. Over the last 2 months, we've advanced our program to create a Leela Palace in Mumbai. We've added another property that will soon come up in our district where we own literally the entire zip code in Powai. And we have furthered our stated objectives to take the brand global. So all in all, the sector tailwinds are clearly ahead of us. Leela was voted as the best brand in the world.
Right.
Very proud that an Indian brand finds global appeal. And I think today is a momentous day in all of that.
No, it is a momentous day. We take that point and we can't, disregard the journey that has been. But the question about stock markets, and you'd know this better than everyone else, and investing, as there is the journey in the future that matters a lot more than what has taken place in the past itself. So a two-part question. Once again, a repeat of what I asked you earlier. Is 250 crores on the bottom line possible by FY27? And the second part, you spoke about increasing your, hotel expansion plans, etc., opening newer places as well. Currently, as per your, red herring prospectus, you have about 3,500 keys. Over the next 2 to 3 years, what is the key addition pipeline that you have?
So I would say the board, in our first analyst call, we will issue guidance, but your numbers are fairly accurate. I would say the company should do better than that. So I can only give so much guidance right now. To your second question, we've disclosed 7 + 1, 8 hotels in the pipeline already. And as I mentioned, there are several others that the company has been working on for the past several months. So the growth ahead of the business is substantial, is superlative. And the ability to extend the brand into newer territories, repeat what has worked for the business. I would say, and I've said this in your channel, that the Leela should be thought of in comparison to any large global brand that exists today, with the added benefit of it being a truly Indian brand. Indian markets are the best in the world today, and the Leela is right front center of that story.
All right. Assuming that you actually go ahead and do a little better than what one's estimate would be, you would still be trading at around 55, 60 times 2-year forward price to earnings. What's Brookfield's own long-term plan? How are you looking at this space? Apart from Leela, you have a couple of tie-ups with a few other brands as well. That's point number one. And secondly, on Leela Residences, what's the monetization plan here?
So let me answer a couple of questions for you. In the last fiscal, which is looking back 12 months, the Leela business did an EBITDA of 700 plus crores, which means that on an EBITDA basis, which in our estimate, and we got 8 times subscription from qualified institutional buyers, a lot of demand in large funds coming into our anchor allotment. So the street estimates for how to value business like this is more basis an EBITDA multiple, which I would say today at the listing price, at the IPO price, makes Leela very, very attractive on even a backward 12 months basis. On a forward 2 years basis, I would think that this business is an amazing opportunities for current investors and for more investors to come and join the story. As far as Brookfield is concerned, we've been in this journey in India for the last 15 years. Our portfolio in India today is almost 3 lakh crores. We are a long-term investor in every story. We build businesses for perpetuity and then involve and invite partners to join us to even further that.
All right. And the monetization model for Leela Residences?
So the Leela Residences is a very attractive sector. India lacks serviced apartments. As we see the proliferation of GCCs in the country, a lot of business activity, people getting more and more mobile, the need for high quality rental accommodation for senior executives has never been felt more. And the supply demand mismatch that exists across hospitality is very massive. In this space, I would say that the supply is almost non-existent. Brookfield has a lot of experience in rental housing, serviced apartments across the world. And that's what we are planning with our first service apartment, Leela Residency, that's going to open up in Mumbai early part of next year. And we certainly believe that business model has a lot of tailwind behind it as well.
So as a proportion of your overall revenue, if you could give us a sense what your target is, should come from the residential business.
It's too soon to tell right now, but as I said, there is almost no competition in this space, and with more than 200 million households getting into the luxury consumption story, the demand for high quality living spaces, which are attached to workspaces, which are attached to places where people spend their time, has never been felt before. And I would also like to say that Brookfield has the experience of delivering on that business plan.
How much faster can you grow in the future than what you've grown in the past? If you could give us a sense on that.
Over the last 5 plus years, we more than tripled the business.
Yes.
With today's event, Leela has further participants from a large number of investors, public market players, large mutual funds, global financial institutions. I would like to believe that the best years are still ahead of us, and the company has a very clearly defined business plan, very healthy balance sheet, and it's playing in a sector which has very, very high demand and limited supply.
Right. Let me ask you this again, because over the last 5 years, like you said, you've tripled your business, but that's on account of a favorable base. You had, the post-COVID boom that happened as well. And a large part of that also was from the initial corrective actions that you took on the company after taking it on as well. Now, as we speak, you've made yourself a formidable base. At the same time, the trends, while they're extremely strong still, they're petering out when it comes to the pace of growth because of the high base already. So in regard of all of that has happened, do you believe that the next 5 years you are likely to triple as you have in the previous 5 years? Because you're saying that, maybe the pace continues.
I would say that, you rightly said that the last 5 years have had many events. Some of them have been favorable. A lot of them have been very unfavorable in the business. It's very easy to look back and say that COVID or the post-COVID revival helped the sector. But it's also, it shouldn't be lost on anybody that those 2 years were probably the worst years globally that the sector saw. So if in that period the business grew substantially, I would like to believe that starting, for example, today, our targets should be even higher than that. And not just our targets, our belief that this business will be substantially larger is rooted in first principles of the opportunity of where the business prides itself, and the management team's experience, along with the board that is there to guide them, and frankly the sponsorship or the promotership as it's called in India. So I would say this is a perfect storm for this business in the space that it exists to grow substantially, hopefully, and most likely will outpace the growth that we saw over the last 5 years in the next several years.
Thanks a lot for that, Ankur, for joining in. Again, a momentous day, so wish you many congratulations, and hopefully you will be celebrating in one of your Leela properties itself. So that's, Schloss Bangalore, the owner and operators of the Leela. Slightly subdued in terms of listing because the market sentiment, etc. as well. But, from the time that Ankur started speaking, there was a minor recovery in the stock price as well. A couple of details that he said which bear some importance. One, 3 years from now, or FY27, we can probably see the net profit cross over 250 crores. And the last 5 years, they've tripled their business. The next 5 years, perhaps, they could grow a lot faster as well, with important parts of the revenue coming in from newer properties that they've lined up for the next couple of years.